Hi Priya, hi Zen.
Hi,
Hi, Pav-
Pavitran. Hi, Priya.
Hi,
Hey,
Pavitran. Hi, Jenny.
hey, I think we can quickly get started on the session. More people are joining, but uh, mindful of the time, we can get started with a very quick introduction. Again, starting with Zen. So Zen is the director of Hello Tomorrow, and again now she's also the executive director of Tinem, where Tinem is a climate tech venture where they invest in Asia startups. So that's on Zen. She worked more than 6 years with Hello Tomorrow, where she invested extensively in the APAC market, into climate initiatives and deep tech companies where they work with a lot of corporate accelerator programs and stuff. So exciting to have you, Zen. Thanks for coming.
Thanks, Pavitran.
Uh, so next, going to Priya. So Priya is the founder and GP of Thea Ventures. So Thea is one of the most climate-focused VC fund in India, and Priya is also the board member in Sustainability Mafia. It's one of the climate tech initiative and consortium in India focusing on climate stuff. So Priya again has a couple of decades of experience in finance, venture policy at the intersection. She worked on a lot of interesting things. So excited to have you here, Priya.
Great. Thank you so much for having me.
Thank you. Uh, so what we're gonna do is we're gonna have like a very quick introductions, and we have a couple of questions we're gonna shoot to you. So we can keep it very conversational between you, Priya and Zen, right? So wanted to quickly start with a question like, could you both of you share your journey in building these bridges between the startups, corporate accelerator, and these venture? Because both of you have been in both the sides, right? Like at the intersection, worked in different capacity. So can you tell us a bit more?
Yeah, happy for you to go first, Jen.
Sure. I'll hit the road running then. Thanks so much, Pavitran, for hosting this and for having us here. I think these are important conversations, and I'm very privileged to be a part of it. So, building on the introduction that you gave of me very kindly, my journey in this space started as an ecosystem builder. So that's what Heltomore APAC's work has always been around. It's always been around connecting the dots with the nucleus being deep tech startups as they emerge from lab. So a lot of them are around TRLs 3 and 4, very young still, a lot more nurturing to go. So in terms of building bridges, it's always been with startups and building outwards. So startups with investors, with industry partners, with policymakers, governments. When it comes to incubators and accelerators, very often they're very key to this ecosystem. We call them our ecosystem multipliers because a lot of what they do is not only also are a strong supply of great startups, but they're also a great resource that a lot of startups should be thinking about tapping into, especially early on. We can talk about this more later on, but I think one of the most interesting things I do want to be able to also drop today is that I wish startups talked with startups more. But that's it for now. Priya, over to you.
Yes, absolutely. Thanks a lot, Shinyi. And yeah, my background has been, as Pavitran also mentioned, I've spent about 18 years working across capital markets at Bloomberg in New York and London, and then worked in development finance, moved back to India in 2014. And for the last 10 years, I've been working across impact investing, venture fund, financing of early stage startups, as well as working in a startup myself, which is in a solar distribution company, which eventually got acquired by Engie, the French utility. So I have definitely, throughout my career, and since I started Thea Ventures about 3 years ago, have had a very active kind of relationship with corporates and with accelerators the entire ecosystem. I think what is sort of really definitive of building bridges is this kind of early stage kind of aspect, because I think early stage companies, I mean, it really takes a village in a sense to raise an early stage company. So you need a lot of support systems around, and we focus at Thea Ventures on B2B. So it's crucial for these early stage companies to have access to corporates through some kind of connections, pilots, first LOIs, etc., for them to test out, their technologies, whether it's software, hardware, and be able to get a foot in the door, and then be able to multiply on those value-added services and keep deepening relationships. So for us, we can talk about it more in the discussion, but it's really vital for us to do, our first few reference checks when we're even diligencing companies. We talk to the corporates and the industries that are, going to be using and applying these technologies, and many of these technologies are industry application oriented, and making sure that there is a valid market for it and a receptive and captive market. So that's something that we sort of really push hard on when we're evaluating companies and even in our portfolio assistance as well. So I'll just pause there and we can take a conversation to the next question.
Perfect. Thanks for the quick introductions, Priya and Zen, right? So we wanted to start from the first point, right? Like, I mean, there's a lot of new models, new things coming in, right? What is an accelerator, right? Like, can we define, because it's getting very loosely packed. A lot of people are working, so corporates have a different definition of an accelerator. An incubator has a different definition. So can we define, and can you also a little bit dive deep into what are the services or things which you do in an accelerator, right? Like, especially Zen, when you work with your work in Hello Tomorrow, you guys were doing a very different kind of thing. So maybe if you can double dive onto it, it would be very interesting.
Sure. So I think from my perspective, I've kind of straddled both sides now. As an ecosystem builder, we also run startup programs. We support corporates in identifying startups that they can collaborate with. We support corporates as well on their open innovation programs, and we've also helped a lot of investors to identify strong, good quality pipeline, and help them with technical due diligence, so on and so forth. So I think with that perspective, now having recently also joined Twinomus Venture Capital, the shift has been quite palpable. And now it's realizing that actually, as an investor, being able to access a good network and ecosystem of startups is really pivotal. And I would say that seeing them have be resourceful enough to know how they can navigate the ecosystem is really quite a sight to behold. For them, whether they have emerged from incubator or accelerator programs, I think you can really tell the difference before and after. There are, of course, a huge variance in offerings as well, depending on industry and what the value proposition of each unique accelerator program offers. I would think that, especially from the perspective of deep technologies and climate tech, a lot of the early stage support is most important around good commercialization of the technologies. Very often the presumed use cases don't necessarily work out. So I would see that a lot of the accelerator programs provide a bit more support around building certainty around the go-to-market, as well as what the commercialization pathways are. Very often startups have maybe the end in mind, but it is a very long journey, and being able to break that up into more bite-sized pieces with milestones along the way to chart their successes and also find encouragement for themselves. I do feel like a lot of accelerators can definitely support on that front. One thing I will say is, especially for startups that operate in heavily regulated industries, having access to a strong pool of mentors via an accelerator program can be a great way to be able to navigate that. So, for example, in the healthcare space, right? A lot of these have pretty reliable playbooks. You have people who are experts at each small little step. And then being able to leverage their expertise really helps to reduce the number of mistakes we have to make. But I think from a VC looking out, it's great to be able to rely on incubator and accelerator programs. I think they offer a value proposition that a lot of VCs just can't. Now, that having been said, I will also preface this with that a lot of accelerators also have an equity fund. So either they take equity as part of the payment for participation in the program, or they would invest upon a startup's graduation from that program. Priya?
Yeah, absolutely. No, I would agree with you. I think it's important to make sure, from our perspective, because we're an early stage VC, we don't do any acceleration in-house. So just to clarify, we are climate tech focused. We look at B2B focused startups that are looking to decarbonize industry, mobility, supply chain, and materials. So necessarily, climate tech being a very new sector is the fact that there are a lot of unknowns in terms of return potential and exits and feasibility of some of these solutions. So in our minds, if a founder has figured it all out and is coming to the table with a solid, business plan with the right top team skill set, typically we look for one solid sales and operation focused founder, an execution focused founder, and the second one should be a scientist or someone who's driving the IP and the technology innovation, and then the ability to execute and deliver that technology for that total addressable market using that founder market skill set. So it's very rare to find founders who have all these three pieces figured out. And so for us, what we end up doing is to always recommend, if we find that founders are, very sort of solid on one piece but not on the other piece, they perhaps need some, hand-holding and exposure, perhaps, it would be best for them to go through a specialized accelerator. And I think I would agree with Ginny. I think the entire process of going through the accelerator, the access to mentors, the access to networks and relationships, and also just finessing of the value proposition that they're able to articulate, getting deeper into the sector. And nowadays we have, venture builders as well as accelerators, which kind of takes it in a different direction. But you essentially have these outfits that can actually co-found and co-build ventures with incoming entrepreneurs that maybe haven't found a co-founder yet and are looking for an idea and B, the right team to build it with. So those can be quite valuable as well. But I think it's a very sort of crucial, I would say, pathway for a lot of these early stage startups to go through if they haven't already, they may be first-time founders, or they may be founders that need just an additional level of guidance. And maybe they have one certain skill set, maybe they have a scientist skill set, and they've worked on a technology or an IP for years and years, but haven't met the right co-founder to be able to accelerate that and take that to the next level. That's where accelerator could actually be quite useful, and certainly in kind of the capital raising potential as a logical next step. So that's where we see a lot of the strengths. And I think in the Indian ecosystem, we have some fantastic accelerators that have come up and that have really spawned into great businesses that have succeeded to capture quite a lot of market share across multiple sectors. So we're excited to see this evolve as well.
Perfect. Priya, again, then can you share some successful VC accelerator partnerships or things we have seen, an example where it was very, very fruitful, right? That should help us.
Yeah, I think from our perspective, essentially we take a lot of inbound referrals from accelerators. And many of them are in universities. So for example, you mentioned Sustainability Mafia earlier, which is the climate coalition, Climate Founders Coalition that I sit on the board of. So they have actually started a really interesting program, which is called Sustainability Ventures, which is kind of spread across multiple universities in India. So sorry, excuse me, they have partnered with BITS Pilani, with IIT Madras, with Ashoka, and with a few others, where they actually incubate student ventures, and they teach a class for credit on climate, on various different kind of masterclass experts who come for guest courses. And then the students eventually form groups that can eventually turn into business plans, and that, if seriously worked on, can spin out and create ventures. So we've been a mentor on, some of these programs, and it's been really fantastic to see, what undergrad and master students are able to come up with in the classroom, using their theoretical knowledge, and then eventually be able to come together to articulate on a problem statement, and then eventually create a business solution to be able to solve for it, and then take many steps further, start a company, raise capital, etc. So there is a capital raising element to it as well. We sit on the judging panel of of many of these competitions. And we find that some of these companies that have come through this entire journey are very attractive for us as a venture fund. So that's been a great pipeline source for us. We also have partnered with companies, and we're mentors on various different accelerator programs in India, but also globally. So there's one called Harvard iLabs, which is through Harvard University, where it's basically the students at Harvard across multiple different schools, whether it's a business school, the Kennedy School, the education program, etc., where they're starting businesses, and they come for office hours once a month during 2 semesters, which are obviously the one academic year has 2 semesters. So we have a chance to actually meet students, and because our main interest is obviously India and the Indian market, we meet a lot of students who are studying there, but who are of Indian origin or looking to build in India and in the sector that we want to track, and which is climate, and they are eventually coming to us for those office hours or those kind of back and forth sort of understandings and learnings, and then we're able to track these future entrepreneurs, and then be able to fund them later and get access to them because of our previous relationship with them. So that's a unique opportunity that we have through an international university. We're doing the same thing with MIT through a different program called the Climate Energy Prize, and we're working with we're starting discussions with Imperial College and University of Cambridge as well. So that's how we look at tracking on the university level, and I think just pure accelerated programs and entrepreneurship ventures. I mean, there's obviously Antler, there's Y Combinator, there's a few others that are international but have outfits in India. I think Antler does, Y Combinator not yet, and then there's some climate specific ones as well that have just started and that are breeding some really interesting companies, which are also becoming more sector specific. So that's one thing I wanted to come to, is that the more niche the sector, the more interesting it is for a lot of the funds, because that the depth of subject matter expertise that these companies are able to build, and that the mentors are specifically able to draw in and in-source is much, much higher than a sector agnostic accelerator. So for us, it's been really helpful. For example, we have recently partnered with the Carbon Zero Challenge and the carbon removal program in India, which is across multiple different organizations. And the quality of startups is super interesting, because it's a combination of nature-based solutions, engineering solutions, etc. And it goes very deep into the science of carbon removal. So the kind of companies that we're seeing are very specialized, and that's something that's very much helped inform our thesis as well on this particular sector, and helped us make it easier to pinpoint which companies we'd like to take forward and further evaluate for our fund. So for us, it's a combination of a funnel plus sector building and thesis building, and then also future tracking, for international folks that are planning to come back and build in India.
So Priya, I love all of that. Thanks so much for that. If I may just provide kind of like a counter narrative, not the most popular at all, but for the sake of discussion, right? So I think in having serviced on the other side of things, corporates that are trying to identify as well startups that they can work with. Very often they do. I find that corporates are more likely to seek collaborations with accelerators because of the industry focus, as opposed to investors. Investors would look to accelerators for pipeline, maybe get involved on a mentorship basis or provide jury type hours, but less as a form of partnership. But what we've seen also is that sometimes when the accelerators, where they reserve the right to invest only after others have indicated their interest in their own accelerated companies, I find that to be quite conflicting in terms of conflict of interest. It also, I think, I would like to think that accelerators should probably have more skin in the game at point of selection, so then you're committing to investing in the startup once they've successfully graduated from your program, as opposed to putting a lot of startups through the program. You take the fees, and then it's at your discretion after which whether or not to invest, and then also based off of industry feedback, because that does not lend much confidence. So that's one thing I would put out there. Another also is that because a lot of these accelerators, again, have their own funds, the manner in which they choose to invest in the startups also doesn't bode very well in terms of signaling for the startups that come out of their cohorts. It's nice if there was a little bit more standardization around how they would invest, what their typical terms are, as well as clarity around the value that they will provide for the startups that come through them. And I think that would really benefit the startups that graduate from their cohort, and would be a really strong signal, once again, to the wider market and the investment community.
Perfect. One question, right? Like I also used to work with this with the accelerator before I came into venture. As when we work on these accelerator programs and work with these startups, we have a lot of these open innovation programs in which we work closely with the corporates, right? Sometimes the goalpost is changing. Sometimes, like when we start with something, it's always constantly changing, and sometimes we also wonder like where it is leading to, right? Because as an accelerator, we spend a lot of time trying to build this bridge between the startup and the corporate, thinking, okay, this is going to lead to a very large PO, or it can help them into the global markets, another thing. But in reality, there are a lot of things like bureaucracy and few other things where are happening, and it's like a endless window shopping, right? How to put it. So you have also worked in the other side, right? So what is your views then?
So, from the perspective of an accelerator, or as a startup, or as a corporate or
As an
investor?
accelerator, maybe then probably we can talk about the startup side of things, right? It's just like how did you help your startup in navigating this like safely?
Right. I think I think trying to put up too many guardrails actually isn't beneficial for the startups. I feel like got to give them a bit of room to navigate, and come to their own. Um, when it comes to them trying to identify perhaps who their first customers ought to be and whose feedback they ought to outweigh, um, or overweight rather, I think that also only comes with experience and isn't something that we ought to route them off. One of the programs that we do run, um, we make it such that there is a mandatory number of interviews every startup needs to conduct. It's very, very robust, but it forces the discipline wherein you have to be able to find the breadth of potential users, and really have a diverse feedback set before you determine what feedback is worth what. Um, I think it goes a long way to helping to shape their perspectives, and really contextualize things for them, because very often, as they take these conversations as well, um, what we found is that their viewpoints mature as well and it evolves. So you'll note that the first conversations that they have with external potential users would be very different than the ones that they have, say, 10 or 15 conversations later. It becomes a lot more around trying to validate if certain features are indeed relevant or needful or valuable, and unique. Things like that, right? So I think for them to be able to have all of those conversations, I wouldn't really call that window shopping. I do think it's part of the process and it builds a lot of discipline, and build objectiveness into that process. Because so one of the things I struggle with, admittedly, is that very often deep tech, climate tech startups, they're founded by technical founders. They understand the technologies intimately and they're really sentimental for all good reasons, right? To their understanding of the technology, and have quite a firm idea of how they think it ought to be used and what it can address. But usually there's a huge dissonance between what they think about their technologies and what a solution actually needs to look like. That's very hard to reconcile. And I think that the conversations that they do take externally, it's really difficult. It's very humbling. But at the same time, I think that's a journey that I would never rob a startup of. I would insist that every startup undertakes that before they come to a firm idea and build the confidence around why they're building what they're building and how they're building, and being able to also then have a strong perspective around the quality of customers they could be having, and what it would be like to actually engage with them, and then to also then be able to rank that order of priority and whose feedback they're gonna ascribe greater weight.
Yeah, no, those are fantastic points, Jeannie, and I would totally agree with you. What we've seen as well in our portfolio, especially from, the founders that are very science oriented, is that sometimes they obviously start building and building and building their product in a lab without sort of really looking at the broader picture of commercialization. And some of these technologies take 2 years, 3 years, 5 years to really commercialize. And what we see, the really exceptional founders in our portfolio that generally come from that, as I mentioned, the top team mix skill set. So one sales founder, one science founder, is that they actually start the kind of quasi sales process without even a product, but actually talking to all of their customers, as you rightly said, before even actually going into committing to a particular, type of product interface, or basically sourcing strategy, or, the initial parts of R&D. And I think the big value of that is to avoid a technology valley of death. So, what happens is that when you're, building in the lab, and then you sort of start requiring more and more capital for your capex needs, etc., but you don't have any commercial orders in sight, and then eventually you go down this kind of valley where you're sort of stuck with so many different IPs that you're trying to finance, but the product has still not been really tested in the commercial setting. So what we've seen companies that are successful at this is basically start those interim conversations with corporates before spending a huge amount of capacity on their lab and on their team building, etc., and then getting the feedback exactly about the product, so the versatility of the product, the sort of different specifications, the pricing, quantity, how that would be structured, even to some lengths, the annual order value, the receivables time length, all the economics of it, etc., so that they have a very good idea of how they're going to be placed. And then they go backwards and figure out their supply chain, their R&D, their materials, and then their staffing in terms of their engineering talent, etc. So I think that has been quite valuable, because they're able to actually avoid that valley of death, because they know exactly what their North Star metric is within certain customer segments. And then, as you rightly said, ranking and sort of rating the quality of feedback is important as well. So, also, some of these companies have a very wide range of segments. I'm sure you've seen a lot of startup decks where they show, oh, we could address the FMCG segment. We could also address batteries. We could also address, furniture. We could also address, various other things, automotive. So obviously you can't address all these segments at the same time. So I think the sort of, carefully sort of planned out, 12-month action plans of what your actual go-to-market strategy is. Are you first going to address FMCG? Within FMCG, who's your universe of corporates going to be? Within those corporates, who do you think are the most likely, the least likely, the ones that are sort of, kind of a waste of time to approach, because the conversation could perhaps not go anywhere? And then who are your sort of champions to actually connect you to those people, and what do those conversations look like? What are some of the kind of I would say short-term, medium, and long-term objectives of those discussions, and then how can we draw parallels between what one corporate wants versus another? So all of that planning, and it takes a lot of I would say prior experience, maturity, a bunch of different factors. But the more that we can see startups emulating that process, I think the faster we'll see a turnaround time, and the faster commercialization of these deep tech models that sometimes can get stuck in the lab for years. But with the right type of direction and the right type of thinking, and the right type of kind of backwards planning, can actually move much faster to industry grade commercialization.
Perfect. Perfect, Priya. Priya, can you also tell a little bit more on how it's helpful, you running the sustainability mafia initiative, right, where you engage with a lot of corporates, a lot of startups, a lot of other policy makers and stuff, right? So having all these stakeholders in one place, how it helps in decision making, or moving, or building in collective how it helps.
Yeah, absolutely. So just for everyone's benefit, Sustainability Mafia is an 85 plus member climate founder coalition based in India. So all the members are actually founders who pay an annual fee to be part of it. And essentially, we have 4 directors who kind of head up the coalition. It's a nonprofit, but I'm I'm the only investor director. The other 3 are the other founders as well. And I think what we've been planning to do or trying to do the last 3 years or so, almost 4 years, is basically build dedicated verticals to essentially build a community sort of level of action planning for climate within India, and really kind of give a massive boost to the ecosystem where all the startup founders are concerned. So the idea is basically to build 4 or 5 main verticals. The first vertical is sustainability ventures, which I spoke about, which is basically I would say kickstarting and really blossoming companies from student universities essentially and student teams to be spinning out, and rather than those students joining Goldman Sachs or KPMG, et cetera, to actually start climate ventures. So that's one big goal. And then we raise capital, and grant money to sort of fund that vertical. The second vertical is the corporate one, which you alluded to. So it's basically tying up with corporates like Cisco or Flipkart or Shahi Exports or others, and then basically showcasing the startup solutions to them. So getting the chief sustainability officer or the chief digitization officer, et cetera, in the room and having these discussions, roundtables, speed dating kind of events where startup solutions are effectively marketed or discussed, which are relevant to those corporate heads, and then within the Sustainability Mafia membership group, and then those corporate heads decide on which ones would be relevant for them to implement. And so far we've tied up with quite a few corporates, and we're still looking at expanding even more. So it's a really big focus. The third one is an investor vertical, so where it's not actually VC focused, it's more family offices, angel investors, and other private individuals who want to deploy more capital into climate. So that's what we are planning to do, is to sort of enhance that interface and actually get these investor members to be mentors on all the other different verticals. So they're a lot of them are family businesses which actually have corporates, or are publicly listed in some ways. So they can actually be part of the corporado vertical as well, the corporate vertical, and where they actually can implement some of these startup solutions. For example, a packaging company can implement energy efficiency into their overall packaging factories, etc., and energy efficiency solutions. So that's something that can have a crossover effect as well. And then the other pieces are, there's one called Climate Ninja, which is essentially enhancing student talent to join, and young talent to essentially join startups. So we run like 3-4 different online workshops and masterclass programs. And these students or young people apply, and they go through a series of online workshops, and then they're placed into different startups for work experiences. It could be 2 months, 3 months, 5 months internships, and then they're converted into full-time hires. So that's another one that we're doing to build the ecosystem. And the fifth one is just a community vertical. So basically trying to encourage enough, I would say, interaction and collaboration between the startups across different chapters, where we have we're aiming to build a Bangalore chapter, Mumbai chapter, and Delhi chapter to begin with, and then maybe take it further as well. So that's how the sort of coalition, and I think it's always helpful to have an industry-wide coalition. So in the VC space, for example, in India, we have the India Venture Capital Association, and then for various others, Confederation of Industry, which is for large industries as well. There's Family Business Networks. So various others. I think this is a great one for climate founders, because it is, as many of you know, it's quite lonely building a business and being an entrepreneur. So to have that family of entrepreneurs around you and people to bounce ideas off, take support from, exchange thoughts on who's the best hiring headhunter, or talent agency, who's the best legal support, who's the best financial support, etc., for growth of your startup. These are all important kind of, I would say, exchanges of ideas that need to happen through a safe space, safe community, and this is the kind of industry coalition that provides that.
Perfect. Priya, one more follow-on question here, right? Like again, like you have built like a very huge, partnership network for your portfolio, for your community, like for sustainability mafia, right? So for someone like who wants to build their own partnership network, right, to support their portfolio or their folks, what is the non-static like someone can do, right, beyond the usual conferences and introductions? What do you do to build this network, and how do you maintain these relationships too?
Yeah, no, that's a great question. I think for us, we're fortunate we have good access to corporates, especially within India, and also through our LP network as well, for our fund. So various, companies that are in, heavy industry sectors, for example, in mining or steel or cement, but also infrastructure, FMCG, automotive, etc. But then I think beyond the, LP network, etc. I think one way that we've seen, especially the folks that work in our investment team, for example, who are in the associate or AVP level or analyst level, they're able to actually tap into their student networks, of people who actually would have joined other corporates. So maybe they would have there, at graduation, there's a whole pocket of people who would have joined investment banking, consulting, maybe startups, maybe technology companies. But then a lot of people go and join MNCs and corporates. And I think through that alumni network, it's very possible to actually tap into insights, from these insiders into the corporate world, to actually see what they would think about the right person to take a call and be a decision maker on a particular vertical that could incorporate a startup technology, and what that would look like. So that's on one. As the second is also, I would think, industry conferences great, and international conferences as well, but also just outreach. I think being LinkedIn being a very open network, it's actually quite easy to approach, be digitally active and be able to kind of reach out to folks that you think would be a right fit for your portfolio company, both from a advisory, mentorship, that kind of space. Because what we've seen is the most successful portfolio companies of ours, or at least that we've seen in the ecosystem, they always have a sector specialist or someone from a corporation on their advisory board or as an independent director. And that's really helped them to, kind of get contacts at, setting up factories, or to get the right tech talent, or to at least open doors to senior most people, in big corporations, etc. And it's been, especially in the early stages before that company has really, become mainstream and rolled out their offering, having that advisory level person really, really helps. So I think it's a question of just plowing your networks as a within your student network, your professional network, etc. Seeing that potentially you can even cross-pollination even works. So sometimes even some portfolio companies have certain clients that could be quite helpful to other portfolio companies. So actually making that introduction or that jump. And I think what we've done in the past, not at Thea Ventures, but at a previous fund I worked for, is we had a CEO forum for all our portfolio companies, where we invited all the top management of those companies. And we had a 2-day workshop where we invited different people from corporations to basically come and speak to these corporates, to these startups, and basically help them understand what are the pain points, what are the challenges, etc. We did the same thing with government, departments and ministries as well. But I think the idea was just to get the ball rolling, and a lot of startups actually were able to share their essentially their corporate customers with other startups, and I think it wasn't really a competition, because it was different verticals of, say, Flipkart, or different verticals of, say, Dalmia Cement or others, that could basically interact with the different startups doing offering a different value proposition. So I think cross pollination and sharing within an existing funds portfolio can really go a long way, because there's no proprietary sort of hold on a particular corporate if you're operating in different sectors, that is, as a startup. So that's that would be my take on that.
Great. Zin, you wanna add something?
Sure. I mean, Priya's covered that very comprehensively. Maybe then just one final point. After you've done everything that Priya's done, just make sure, if you have time of day, make time. Make time to nurture these relationships as well, because a lot of it is built on trust. And that's the ecosystem that we deserve, is one that trades in trust as well. I love the startup community aspect to it, because I think having startup founders be the support system for their fellow startup founders, there's nothing quite as precious as that. And there's that cheat sheet that you get to pass around from startup founder to startup founder. And I think that's where some of the best friendships also emerge. And then in terms of specific to corporates, one of the things that we've also explored would be identifying how we can actually open it up so that it's less corporate to startup or like one-to-one. It can be corporate startup collaborations, for instance, especially if the corporates are in adjacent industries but with shared interest in particular types of solutions built upon specific types of technologies. That's where the startups come in. But I feel like in a lot of these kinds of setups that we've orchestrated, it's always yielded quite differently because yes, it's a little bit more complex because now you have one more corporate in the mix or two more corporates in the mix. But at the same time, there's also a different set of resourcing that becomes available. And I think in those kinds of networks, suddenly we've also torn down the walls between corporates. And that, again, is another layer that tends to be quite overlooked. But yeah, that's it for me.
Perfect. Maybe we can have like a very, very quick Q&A with the folks here, right? We can have like a few questions. So people can type the questions and put in the Q&A section, which we will, move it here to the stage and you can add. So Priya and Zin, like we have this question, is compliance and reporting still a bottleneck for growth of startups and sustainability ecosystem? And second one is, what do you feel are some gaps that can be filled by Indian founders building for the global markets from India?
Do you want to take the first one, Shinny, and I can take the second one? Or
Sure, happy
yeah.
to. Okay, pertaining to the first one, I would say that if compliance and reporting is what bogs one down, then that's on us to fix. Meaning the wider ecosystem. It's something I've felt quite strongly about, being that simply because you're a startup that purports to address a particular impact sector, for example, climate, then the onus becomes on you to actually prove that you're doing so. Whereas other startups that don't have any such impact ambitions have nothing to prove and don't have to incur any costs proving that. So I feel like a lot of that reporting is an overkill. It becomes an impact premium that good startups end up having to endure, and impact investors. And I call it impact quite broadly simply because that's kind of what it is. And I would park climate under there, being that simply because you have these ambitions and that's your primary cause should not be reason for which you ought to have an extra obligation to report, vis-a-vis your other peers. And that's something I want to see change. And if compliance and reporting is what gets in the way, then I think we really need to check ourselves. And I think whether as investors or wider ecosystem stakeholders, these are conversations we need to have, because I've seen a lot of accelerators and incubators and even venture builders, while they're putting their teams together, these teams are trying to learn to walk. And here you are telling them, hey, you need to report on your ESG, all of these metrics. And you're like, first things first, right? Let's make sure this even works. And then we can talk about all of that later. And I think it detracts from what is actually at hand. So that's my response to question one. Priya, over to you for question two.
Thanks, Shini. I agree with you on question one as well. It's important to give the startups the breathing room, to be able to first get their product and value proposition on the road, and then talk about the reporting and do what's realistic within their bandwidth and within their kind of cash constraints as well in terms of team and reporting capabilities. But yes, on the second question, I do think yes, India has a lot of really incredible natural advantages. I would say where Indian founders can really build from here to basically cater to the global market. I think one strong area, and because we're in climate, we find that there's a lot of opportunity in basically the organic and natural feedstock, that you can actually basically, I would say, supply chain advantages from being from India. So, for example, the entire agriculture value chain. So many of our companies work in the waste residue within agriculture to basically utilize and convert it into useful inputs for either the bio-based, kind of cosmetic sector or the textile sector, packaging, and various other circular economy initiatives. And I think the interesting thing about working, from India is the cost advantage of really being able to source, at very, very high volumes but very favorable unit economics, which I think can really position oneself quite advantageously when it comes to the global markets. When you think about global sourcing and global manufacturing, it costs at least 2 to 3x more in the US to actually build a factory, any manufacturing outfit, and that's along with incentives, etc., from the government and some sort of tax baits as well. So I think Indian manufacturing is really where a lot of the teams here and founders will have an advantage, both in terms of labor costs and supply chain costs, and being able to then have that leg up to basically then sell to global clients at a premium. So I think that's where one will actually develop that the margins will look a lot more attractive than a Western or US European company doing the same thing. That's one. And then of course I think the age-old software expertise that India has in terms of the software engineering talent is certainly an advantage as well. And some of the best companies have really come from Indian talent building in India for global consumption and large, especially US-based clients who have been able to absorb these solutions as kind of paying alternatives. So I think those two I would say, but for climate specifically, I think having that labor and manufacturing advantage, having the access to agriculture, and all of the other natural advantages being from India in terms of the mining, the materials, the long coastline, the forestry, and all of those from the feedstock advantage is quite strong, in our opinion.
Perfect. Moving to the next one. Just give me a second. Yeah. What would, in your opinion, be the consideration set for founders to seek accelerators that work for their startup? When would it be optimal versus suboptimal? Zen, you wanna take this?
Sure. Again, I speak from the perspective of deep technologies and early stage startups. I think it matters that you're able to find an accelerator that understands the translation and commercialization of hard technologies. I think that's one. The moment you apply that filter, you'll note that there are actually very few accelerators left. And then you apply the next filter, being, do they understand your industry and your potential use case? Do they understand what it takes to scale as well? And how do we build in those kinds of anticipation? How do we plan for what's required for that in advance? So in trying to optimize for an accelerator that's actually worth your time, one thing I would say is that typically by the time, and this is an accelerator, I differentiate that from an incubator, being that by the time you're seeking an accelerator program to participate in, you should have a very good sense as well of what is it you need, and what are your expectations coming out of that program? What do you want to have learned or unlocked or achieved during your sacrifice of time, which for a startup is very precious. So then being able to have that and understanding what exactly is the nature of support you should be anticipating in that program, I think that's pivotal. Sometimes the programs are overly generalized, and especially at an accelerator stage, I find that to be quite pointless. I do find that regardless of the industry, there has to be a very high degree of personalization for every startup. Every time we've run accelerator programs, incubator programs, the very generalized business 101s, going to markets and things like that, people don't need that. Usually, if you've gone through like one of the commercialization programs, if you've spun out of research or academic institutions, all of that would have been made available to you. And generally, this is my assumption, by the time you've decided to incorporate and spin off that company, you would have had some of that hygiene in place already. So if the program is overly generalized, I never found that to be helpful. There has to be a very high degree of one-to-one, and also group workshops where it's less facilitator driven or curriculum driven, but a lot more founder exchange. So I think in terms of then being able to have very clear expectations of what an accelerator program can do for you, for your time, for your expense, whether it be a program fee or some percentage of equity. I think having very clear expectations around the customized the customized aspect of the program, where they tailor what they provide you to what your needs actually are.
Perfect. Perfect. Last question, Priya. This one is for you. So, wanted to know if there is a metric or a framework that you are using to measure the impact or productivity of the forums you have shared.
So is this question regarding the forums, meaning the sustainability mafia and all the different verticals around the industry coalition, or is it about the portfolio companies? I wasn't sure.
Uh, Also not sure. Probably I'm just gonna check. There's in the chat, like if the person can add more detail. But I think it should be more from the portfolio side. Maybe we can take from portfolio side.
Yeah, sure. So, I mean, when we're looking at reporting for our companies, each of and impact as well, we look at basically monthly metrics, semi-annual and annual metrics. So the monthly metrics are your standard financial metrics, basically the MIS, revenue, gross margins, EBITDA, net profit, and then, cash at hand at the end of the month, and number of employees, etc. We also, on the semi-annual level, we look at, larger business metrics. So basically number of customers that have been added over the last 6 months, the annual order value, the churn, etc. And then various other pieces around, ESG metrics as well, like number of employees and the governance framework. And then at the 12-month mark, we look at basically doing an impact audit. So that's because we're a climate fund. We look at, carbon emissions that have been abated through that solution, number of liters of water that have been saved, number of basically carbon emissions mitigated as well per revenue generated, and there are various other carbon specific metrics, and we are looking at basically having involved a sort of external LCA or ESG audit to help us with a lot of those climate tracking mechanisms as well, and then we do a monthly performance. I would say it's more like a monthly operational review with the companies, which essentially sort of look at the more qualitative, performance of those companies. So we do basically a call with the company to understand what went well in the past 4 weeks, what didn't go well, beyond just the financial metrics that they share with us. And then that helps us give us an idea of where the company might be maybe needing some help or struggling, and then we provide that help, whether it's in terms of talent, introductions, fundraise, etc. And yeah, I would say though that's the element, and we also have obviously the mandatory quarterly board meeting. So we usually take a seat on the board and we attend as per statutory compliance, and that's important for us to, actually it's very crucial for these early stage companies to implement governance from the get go, and really strong governance, so that we make sure that they are compliant with it. So when they become larger growth stage, eventually, in a much, being able to then for us be able to exit to a larger investor, they should see that this company has been well governed and well sort of tracked, and transparent with their metrics from day one. So we try to implement that from the very beginning.
Great. Thank you, Priya. I think that's all. Just like mindful of the time, probably we'll just like wind things up here. So thank you for joining, Priya, and thanks for joining Zen again. Zen, I think you're joining. It's already late in Singapore. Thanks for joining us. We'll keep you guys posted. Thank you.
Thank you
Thank you
so
so
much.
much.
Have a
Yeah,
good
such a
evening,
pleasure to be
everybody.
here. Thank you. Have a great evening.
Bye.
Bye-bye.
Bye bye.